Welcome to Digital Look TV. This afternoon we'll be talking about the current market, and Alejandro Zambrano, who is the market analyst at dailyfx.com, as well as Alex Bueso, editor-in-chief of Digital Look. We're going to spend the next few minutes exploring what's happening in the market, and both Alex and Alex will share their views. Can we start with what's been happening over the last few days in Portugal and Cyprus, and more recently this morning's Portugal news? And what do you think the impact of those news will have now on Italy and Spain, Alex?
Okay. What we have seen in Portugal over the weekend was the Constitutional Court that struck down some of the economic reform measures. While this might seem innocuous at first, it's actually quite dangerous. What you have is austerity fatigue in most of the Eurozone periphery. But this is even more serious because you're talking about a very difficult to remove barrier to the economic reforms which are necessary for Portugal to receive the funds which it needs. And it is also extremely critical from the point of view that it could conceivably set a very poor example for other Eurozone periphery countries. So we're waiting for the details throughout this coming week. But potentially, for example, you had, to give you an easy example, they're saying now in Spain that you might have some court rulings. Again, we don't want to exaggerate this, but anything like that would be tremendously serious. And the situation in Italy is extremely tense right now, very chaotic. So anything that shows that countries are not willing to do what they have to do, and there isn't that social tolerance, acceptance, I think is actually more dangerous than the market is perhaps giving off at the moment.
So based on that, on what you said, Alex, Alex, what do you think that the influence of that would be in your field?
Yeah, definitely. I mean, if you don't agree upon something, then we're definitely going to be in trouble. As I understand it, I think they have a deadline until September. Yeah, so we have until September with a little bit of chaos, back and forth, politicians, and then probably at the very last minute resolve something around this. And just because we have until September to change, just to do something about it, I think that might be one of the reasons why the market is not necessarily focusing on this right now. Also, we got the situation in Cyprus, of course, very fresh, and we still got to get more input from there. Still, though, the euro has not really traded so much lower. I would say people that are already short the euro are already in the market, and we might even see a reduction in the number of short positions just because we have some data last week, more from the macroeconomic world, talking about very weak data from the US. We got non-farm payrolls printing at 88 versus expected 190. We also got the ADP report coming in at roughly 156 versus 200 expected. And ISM manufacturing, ISM services, so pretty much everything coming in weaker. And this is something that is weighing on the dollar, I would say. So I do agree, the situation in Portugal and Cyprus is definitely something that's most likely going to affect price. But in the short term, from a trading point of view, I think the euro might actually go a little bit higher as people are focusing on what's happening in the US.
Okay, that leads me to the question, what do you think will be the catalyst to move the euro dollar?
The catalyst move could easily be, as Alejandro here was explaining, if they do not resolve the situation in Portugal, are they going to impose bail-ins as they're doing in Cyprus? The situation in Cyprus is very, very severe. I don't give any market recommendations, but I do tell my friends, if you happen to have an account in, say, Spain and Italy, you might consider to maybe move your euros, some of the money at least, to some other countries. Yeah, so it's quite severe. So that could be one of the catalysts. But in the short term, as I said, probably up in the euro, because we're in a soft patch. We got the fiscal cliff, the sequester, effects of that playing out right now. It's probably going to lower US GDP with about 1.2% this year. But then in a couple of months, maybe we'll reach, say, 135 in the euro. I believe that US numbers are going to start to improve. Not only that, you might have more things blossoming up in the eurozone.
Okay, let's move to some of the other news this week. We're expecting Bernanke to speak twice. and a number of other officials from the US to also be presenting this week. And what do you think the message is? Is it about building confidence again, or what do you think the message is for Bernanke to be on the news twice in a week?
Right. I think Bernanke is known for being very paused, measured, and very steady. Last week you had at least 3 Fed speakers who started to say something along the lines that at a given moment this year we'll start to table quantitative easing. The markets, I think there was a little bit of trembling at hearing those words, especially from Janet Yellen. She's the number 2 at the Federal Reserve. I think Bernanke will try and moderate that. He has 2 chances to do that. I think the Fed is going to be very, very patient with what it has to do this year.
And I do agree on that. You know, when non-farm payrolls prints at 88, you know, he needs to give the economy more time to be able to show that the labor market is improving. He said that also at the last meeting at the press conference, that just 1 month of data is not really going to matter too much. However, though, traders many times are very short term, so they can see 1 or 2 months of good data, and then you start to expect, a quite significant reduction in quantitative easing. And that's exactly what I'm referring to, that I referred to in the beginning, and that is that the weaker data now puts everything on hold, at least for 3 months, I would say. And with the potential soft patch in the U.S., because of, say, something like the payrolls tax increase, about 2 percentage points from 2 point, I think if I remember it's right, it's 2.2 to 6.2. And
That's
yeah,
right.
And this is going to limit the labor market in the short term, which is going to mean, in our case, that quantitative easing is not going to be reduced anytime soon.
That's great, thank you. Given the fundamental and the technical turmoil, are there any extra safety measures that a trader should adopt nowadays?
Well, I think perhaps let me know if you agree with me or not. I think the market, in some crosses, can be very volatile. Euro-dollar, no. So it depends on what crosses you're operating in. You probably want to wait for as clear a comfortable risk setup as possible. That's always on your wish list, but if you're patient, chances are you'll get a much better entry point. So there's always time to make money. Nobody has to be in a rush to lose it. It's just patience, same thing, and just wait for a clear shot. So careful and be very patient.
And Alex, have you changed your trading strategies in view of so much change at the present time?
Yeah, the main thing we're looking at right now, at least for what we do at dailyfx.com, because we work a lot with short-term traders. Our traders will trade about 3 times per day. So that's the turnover, and that's the levels I'm looking at. But in the short term, I'm looking at the 131 level in the euro dollar. If you look at it, we have a downtrend from February from pretty much 137 all the way down to 127. So that's about 1,000 pips. And I would look for the 31 level to hopefully break later this week, and then maybe hitting higher slowly to say 134, 135. Now there is an alternative thing, and that is specifically in the case if we get some new shocking news from the Eurozone, like something that the market is not ready on. And in that case, if we look at the 126.50 level, if we clearly break that level, then we're definitely going to continue lower to say 120 over the next 6 to 12 months in the euro dollar.
That's great. And finally, to both of you, do you think that Bitcoin has a chance to build on the momentum it's gathering at the moment? What's your thoughts on that? And will you be investing with the Bitcoin?
No, personally not. I don't really fully understand the function of it. People are talking to me, like the men on the street are asking me, just because I'm into currencies, like, so have you heard about this? Is this something I can go into? And probably can go a little bit higher. I mean, it has increased a lot, but I think it's just a bubble like everything else. At least that's what I can say with my current knowledge. So, I don't know if you have anything to add to that, Alejandro.
I think like all new phenomena, when they're not correctly regulated, in fact, this is simply not regulated, you end up getting bubbles. That's exactly what you have. But if you have another move like the president of the Eurogroup saying that he is going to bail in depositors, I think he might be a very intelligent speculative player.
Alex, thank you for your time and for your contribution and sharing your views. And we very much look forward to seeing you again. Until next week, goodbye for now.